Now, saving and investing from an early age is always about creating a life filled with choices. The choice to spend time with the people that I care about, do work that I enjoy, travel more, train more, and be a better dad. So to kick things off, bro, let's talk about savings tips.
So there's two ways that we can go about saving. You can do it the really boring and hard way by budgeting and looking at every single income and expense in your life and try and maximize the amount of saving. We can do it the way that Ben and I chose to do it, where we just paid ourselves first. And all you have to do there is commit to a certain number that you're going to pay yourself every single week and commit to that until you've hit your savings goal.
So the reason I chose property over stocks or crypto or other types of businesses was simple. I could use leverage at an earlier age to set myself up financially. When I looked at the history, a book from John Lindemann called Mastering the Australian Housing Market talked about property in Australia growing by 11% per annum over the last 100 years. When I went deeper, an article from Homely said that property in Sydney, Melbourne and Brisbane had grown by more than 9% a year for the last 50 years. And then recently an incredible article came out from CoreLogic where they said that property in Sydney, Melbourne and Brisbane, or Australia's capitals, had grown by more than 15% a year for the last 30 years when you look at the total return divided by the number of years. That's why I invest in property.
500K today is actually a great budget if you are just getting started. And the beautiful thing about property and investing is compound growth. Now, if you hold that property for the next 15 years and you invest in those capital cities, there's a chance that you should double the value of that property. So it could be worth $1 million in 15 years time from now. It could be worth $2 million in 30 years from now if you buy it 500K today.
I love that. So that's making the assumption that the property grows by about 4.8% per annum, which is significantly less than the long-term history. Now, what about if I had a couple of $1 million to spend today? Where would you be if you could invest that?
Man, it's absolutely crazy. If you buy a $2 million property today, assuming a 4.8% increase over the next 15 years, it could be worth $4 million. Or if you hold it for 30 years, it could be worth $8 million with that 4.8% increase. And once again, significantly below the historic averages in those big cities.
You know, so whether you're starting with one property worth 500K or you're going to go out there and ball in the next few years and go big, you can see that saving a little bit of money consistently over time and then investing that money has created all of the wealth, all of the choices and all of the financial freedom in Australian history. This journey over 15 years that you're talking about isn't this beautiful straight line. It results in a pretty bumpy ride, but if you can stomach that and you can see the vision that you want for your future, which is financial freedom, then saving money and investing it can be a great way to go. So as investors that started out at 25, consistently saving money and then investing that has completely changed our lives for the better. If you're in a position this year where you're seriously thinking about take advantage of this mini dip, then we would love to offer you a one-on-one strategy session where we can talk about where you are today, where you'd like to be longer term. We can educate you on the market and then you can go and smash it on your own with those ideas, or maybe you can become one of the small number of clients that we work with each week. But either way, you can book those sessions over at www.pumpedonproperty.com. Myself or my brother Simon would love to catch up with you, and we wish you all the best for the year.
Woo! That's a wrap.
That's a wrap.
Getting cool, bro. Yeah.
Oh, sweaty. So sweaty.
Oh, that's good. That's so nice.
Oh.